You're going to prove yourself. You're going to take some of the rejects that the in-house builder doesn't want.
I've never done a tropical interview before, but today I did a tropical interview. So I'm meeting with Carl Streicher today, and he is in Maui enjoying his time. And he took a little bit of time to talk with me today because he wanted to share his experience with all you guys. So in today's episode, we're going to talk a lot about ethics. And even though we don't talk about ethics per se, I say that because you're going to see it in everything Carl talks about in the way he is as a person. He's the most ethical person. And I say that because it carries into our profession as a whole. And one goal I have here in the tail end of my career, on the back nine of my career, is that we leave our industry better than we found it. And I think ethics is a big one there. Also, legacy. And you're going to see how Carl's bringing his experience of over, I think he said 35 years into Ethos Lending, because he just joined Ethos as the director of mentorship and growth, and the legacy that we plan together to leave behind for the younger generation. And really fun. We did this client consultation at the very end of the show, and it was amazing, right? You're going to hear how he talks to clients, how he affirms real estate agents, and he's going to give you this one massive bomb that's going to tell you how to never lose a client. This is what he said. He said, oh, never mind. You're just going to have to wait until the end of the show. I hope you guys enjoy the show. Carl Streicher, welcome to Ethos. Welcome to the Way Podcast. How are you?
All right. I'm doing fantastic, Dino. Excited to be here. Thank you.
Tell you what, Carl, I'm gonna kickstart it the right way. I hope you don't take any offense to this, but there's something I love about our generation. We have thick skin. We don't take offense to everything. So here's one thing I do love about you. You are older than me. You've been in the loan business longer than me, and you probably closed more loans than I have. So I was taught at an early age to respect my elders. So today, hats off to you for being my elder and being on the show. Thanks for joining.
It's a pleasure. Thank you.
And I'm not calling you old. I'm trying to back it up with a backhanded compliment by saying you've closed more loans and you got more wisdom than I do. So
yeah, I don't know about that, Dino. I think you've been on a path. Your learning curve has been like a hockey stick over the years that you've been in it, and it's not new for you. So you've been at this a long time, and it's fun to watch to see what you're putting together and how you're growing personally and as a company.
Well, I appreciate that. So just for everybody listening, I tried to recruit Carl a while ago, and he didn't come over, but we stayed in touch, and we've become friends through that period of time as well. And now he officially has joined Ethos. And I didn't want to bring him on here to brag, just that he joined Ethos and all that stuff, but he is actually coming on because he's director of mentorship and growth. And the truth is, the dude has a lot of wisdom, but he also has the biggest heart in the world. And that's why he's absolutely perfect for this role, because he's going to be able to usher in, I think, a couple different categories, but the one that I'm most excited about is the younger generation that needs to learn how to do loans the right way. And listen, technology is great and all that, but there's still that old school piece of learning how to do loans, which doesn't just mean this is how you do loans. It means this is how you talk to people. This is how you stay in touch with them. This is how you advise them. This is how you actually care for them, and you work on getting them out of debt, not into debt. So I'm going to go through Carl's entire history of being a mortgage pro so we can lead back to today again and really, I think, finish strong with where we're ending here with Ethos Lending and your new role. But first and foremost, Carl, who are you both personally and professionally?
Well, again, thank you for this forum. To be able to talk with you and connect with you on this level is something really special. And who am I? I'm a child of God. I am a father to two beautiful children, 29 and 31, and married to my wife over 35 years. Met her when I moved to California. My dad was in the military, so I came out here as a 10th grader to Fallbrook, California. My dad was at Camp Pendleton, and I fell in love with this girl. And after college, we wound up making it official, and it's been just a wonderful life with her. So super involved in the community. Being hyper local is a key for me. I've been on board of directors and executive boards for the Carlsbad Chamber of Commerce and a number of other different organizations. And it's just so fun to give back and to be part of the community, and to be in the mortgage community as well is key. Professionally, it's been a journey since 1990. Got into this industry right out of college, and gone through ups and downs in the market. And no matter what the curveballs are that the industry throws, the mortgage industry has provided an opportunity for me, for my family, for those that I've been able to serve. Has been just a key opportunity, and to be positioned in whether it was big banks or independent mortgage banking to finding a number of years ago, the broker world has been truly a opportunity to deliver even better for the clients that I've always been serving.
And I don't know from where you sit right now, that if there's even anything to show or not, but for those of you guys that don't know, Carl is actually is Maui, I think, or where are you at?
I'm in Maui, over in Kanapali.
He's in Kanapali right now doing an interview with me. So gotta love the guy, and you gotta love the industry, because you could be in Maui right now still doing business.
Yeah, absolutely. So no, if I spin the camera around, I'm only going to get white out here in the screen, but it's beautiful out. And this morning was just awesome. Yesterday we had just an epic day on a trilogy sailboats, and all kinds of wildlife, and just a great time with family.
Awesome. All right, Carl, let's go back to day one. How old were you? Where did you start in the mortgage business, and why did you start in the mortgage business?
So I went to business economics degree from University of California, Santa Barbara. So I started off in business econ, and while I was there, 1987, it's a great part of the story that painted to where I'm at here today. Was I got involved in doing some internships back then, and I was working with Payne Weber, big stockbroking agency. My day one was the October 1987 stock market crash. So those who follow the market, who pay attention to that, it was the Black Monday that hit the stock market. And that was my day one. And the guy that I was working through under this internship said, don't even show up the next day, because it's going to be a battlefield here. Of course I showed up. And what was interesting is to watch all these seasoned brokers out of Santa Barbara working with their clients, trying to figure out how to pivot and what they could do with those clients. And I saw a lot of them jumping out of the stock market and into other investments and single premium life annuities and things like that. But watching the way that they reacted to it, it looked like they were more focused on their own book of business and how they were maintaining their book of business, as opposed to the wealth and generating wealth for their clients. At the same time that was happening, my dad, as mentioned, he was in the military. My mom and dad, for the 4 years that I was in college, they were in Puerto Rico. My dad had the command of a piece of the Navy in the Dental Corps over in Puerto Rico, and they were coming back to Camp Pendleton for another tour, and they had to buy a house. And while I was in college, they asked if I would help. So I wound up kind of being the middleman, working between them in Puerto Rico and working with a loan officer who was putting together a VA loan. I didn't even know what that was, helping my dad get a loan on the property, as well as finding the right house. So I got to work with a great real estate agent at the time, got to know a little bit about the mortgage industry. And what really just was impressed upon me is I could see that I'd watched my parents trying to create some generational wealth through home ownership. And I compared that and contrasted that to what I was seeing in the stockbroking world. And those guys are professionals and powerful referral sources, and they're delivering great execution for their clients. But home ownership, you still get a roof over your head no matter what happens in the market. So it's a home, and that's always been important to me. And to be able to provide that and help, I made a decision right out of college as I was going. My first job was getting into a bank. Nobody wanted to hire an ex lifeguard who was trying to turn professional, hanging up the bathing suit and put on a 3-piece suit. We go originate loans. It was a great experience for me, and I got right into the mortgage industry. And I have been in the mortgage industry the entire time.
So should we nickname you the Hoff? David Hasselhoff,
That's it.
a little red Speedo and lifeguard thing.
That's it. Yeah, we stayed away from the Speedo, but yeah, red was the key trouble.
So your first job in mortgage, was it desk jockey, like telephone guy? Was it did you go right into learning how to meet referral partners and develop your own book? How did it all start?
Yeah, so it was. I had started with Lincoln Savings and Loan, who had been taken over by the government, and they actually didn't have the ability to do loans at the time. They were under RTC control, and that means the government was chopping up the savings and loan industry. That doesn't even exist today, right? There are no savings and loans. That whole industry went away. But it was a gateway for me to get into a company knowing they were going to get purchased, and they got bought by Great Western Bank. Great Western Bank doesn't even exist today, but Great Western Bank was a powerful in-house lender. They were selling their own products. They weren't selling much off to Fannie Mae and Freddie Mac, Ginnie Mae. They were doing their own loans. They were pretty much a portfolio lender at the time. Traditional banking, take in deposit money, lend it out and get a margin on top of that. But I was watching the pros that were there. I went in just as a rookie. I was just there was no education. I was just watching what other people were doing. What were the successful loan officers doing? And I tried to mimic them. And I crossed paths. One of the things I got interested in was looking at the builder industry, and I started going to the places right after going to caravans, talking to realtors. I started going to the building events and talking to builders, and that resonated with me for a period of time in my career. And I saw this young group of guys who were all dressed nice, and their hair was slicked back, and they were wearing Gordon Gekko suspenders, and it was just a group of guys that I thought, I wanted to learn from them and see what they're doing, because they brought a lot of energy into the room. And sure enough, I went to work for a company called AccuBank Mortgage. So it's been a progression of looking at where I'm at, pivoting to what the market's delivering us, and then trying to move forward from there. So it was a series of growth steps.
So I think a lesson for people, and I'm going to say it with caution, but Carl was, observing and watching what top producers were doing and trying to learn from them. Right? I think we could all learn from that. Success leaves behind clues. I love saying that, because the truth is that, why do you always have to reinvent the wheel? You can just pick up what other people are doing. And if they're doing it successfully, I think that's a great first start. Now, your personality says that you should do it a little different. If your market says you should do it a little different, then fine. Change it up just a little bit, but success leaves behind clues. So, first thing he said that I think is important is, he was watching. So the thing that I said was use with caution. I think in today's day and age, with maybe social media being kind of the catalyst to it, we get enamored with people because they do a good job somewhere on social media, or the perception of what they're doing. And I would caution you to be a little bit more careful about who your role models should be. And, we talk about kids and who their role models are. Well, even as adults, right? We can easily be enamored with the wrong role model. So pick good people. And Carl and I have been in the business for so long. And I got to tell you, there's people that make money, a lot of money, doing loans that don't live what I would consider a good quality life. And sure, they're making a lot of money, but gosh, they're just living the wrong way. There's a better way to live and do business the right way that'll sustain for your entire career. A lot of these guys that, they peter out or whatever the term is called, right? Like they hit their pinnacle, make a ton of money, market shifts, something happens in their life, whatever it might be, and boom, they crash just as fast as they went up. I think there's a better way to do it. And this, one of the things I love about you, Carl, is that, you've sustained your career at this high level the entire time. Don't get me wrong. We've all had our ups and downs, right? 2008 was tough. The last few years have been tough. But at the end of the day, we're still holding our head up high. We still have the same clients that we had, in your case, 30 years ago. And I think that speaks volumes to how you've done business. So sure. I hope one of the things that we can leave behind as a legacy is we teach this younger generation how to do business. not just how to do loans, right? But like how to do business, how to treat people. It means an awful lot in the long run.
Do you, when you say that you talk about some of the agents that I've been working with for 30 or 35 years, what's interesting is there was a period in my career where I thought it was pretty slick back in the pager days, leaving a voicemail message that people had to get to me. And I would always, if I wanted free time for myself, I would leave a voicemail message, hiding behind acting like I was busy. And I would leave a voicemail message saying, "This is Carl Streicher. You've reached me on my voicemail. Please leave a message. I'll be in a meeting for the next, 1 to 2 hours, or I'll be done at 3 o'clock." I used to hide behind it and try to put up this persona that I was busier than I was, and that I was in demand. And what was happening was I wasn't developing relationships with the agents. Just this morning, I was down at 6 a.m. down at the pool, scoping out some chairs for the family, and I was getting email messages from a few of my clients referring their clients to them. So the agent was referring their clients over to me to talk to, but in their email, when they did their introduction to speaking with me, they were saying, "But Carl's on vacation right now in Hawaii with the family. He'll get back to you when he's in town." And there was no, I didn't need to hide behind it. I didn't have to act like I was actually working when I was really over here trying to spend some quality time with my family. So it's deepening those relationships and not just hiding behind a fake facade of who or what we are. It's being transparent and open and vulnerable to that. And that really helps you deepen the relationships with the referral partners that you develop over time.
So true. So let's fast forward a little bit. I've never really broken into the builder community, but it sounds like you did, right? Did you do a high level of builder business for a while?
I did. Yeah. So at AccuBank, I met a great guy. He was a leader and a mentor for me at the time, Scott Meyer, at AccuBank. And I had an opportunity to follow in his footsteps a little bit. He helped nurture me into the builder business, introduced me. I was working as a junior loan officer or as a split rep code on a couple of tracks and developing relationships at different subdivisions in the area. And that turned out to be just a great avenue for me for a long period of time. Coincidentally, I was working with about 4 different builders who were soon gobbled up by Richmond American Homes. Richmond American Homes came in, bought 4 different independent builders in the area that I was working with. And I heard whispers that Richmond American was going to bring in their own in-house lending division. And I figured I needed to either join them or go start new relationships because I was going to lose that business. The builders have a good opportunity to be able to control the business and steer that business to a direction that they work with preferred lenders. So where I was losing my 4 builders independently, smaller builders, the big company comes in, buys them out, and they actually wound up hiring me as the leader of, and I helped them build that business. When instead of them bringing in somebody else, I threw my name in the hat, took that opportunity, and I went to work for Richmond American Homes, and I helped them set up their Southern California division of their lending arm. And it was a great run to put that together with them and hire a team of people to call on the subdivisions. I still was originating myself at the time as well, but it was a great opportunity to partner with that builder and have that in-house business.
Do you think in today's day and age, there's business to be had with builders, or is that just all bought up? Every builder has their own mortgage company or is in bed with another one.
Sure.
Where do we stand on that right now?
Yeah, so the biggest companies that have their in-house lenders, for instance, a Richmond American Home or a Kaufman and Broad or a KB Homes, they're just some of those larger builders who do have their in-house lender. They're going to get the lion's share of the business. However, if you look at the numbers and you play scale that out a little bit, they don't do all the business. They don't have the same tools and the resources that a broker might have. They can't necessarily do DSCR loans, right? Debt service coverage ratio loans. They don't really know how to do asset depletion or asset depreciation loans. They're paying their loan officers a little bit less because of that in-house business is coming to them. So they don't necessarily get the best of the agents that are the loan officers on their in-house team. So for a loan officer who wants to get into the game, position themselves as a long play, when you're looking at a subdivision that's being built, it was tough for me sometimes to have a paradigm shift of, here's this vacant land, truly vacant land, that there hasn't been a trench dug or foundation poured. And I'm trying to think of, I know that I'm only going to get paid when we close on that transaction. They haven't even started swinging hammers. So from, as a young guy who was trying to get into that builder business, there's a perspective that you have. It's more than the immediate, make a connection, close a deal, get paid. It was developing relationships that were going to stand the test of time. And when you're doing builder business, especially if you're going in trying to earn that business, even if there's an in-house lender, you're coming in as that second or third wave of lender that comes in, you're going to prove yourself. You're going to take some of the rejects that the in-house builder doesn't want. You may create the relationship. Builder may sell the home to somebody else, but now you have that qualified borrower who you're going to develop a relationship with and take them out maybe to the next house, or they drift into resale and they buy resale. So there's always that opportunity to go in as a secondary lender, position yourself as a resource. And if you can bring tools and skills to the table that the in-house lender doesn't have, you can earn that business.
So how does one do that? How does one actually get in with builders, right? I know there's so many loan officers listening right now, and everybody would love to, but it's a tight market. And I think relationships go a long way in that sector. How does one become a backup?
Yeah, so there's a handful of ways that you got to think about. And again, I know, Dino, your audience, you've expanded your own business into multiple states. So that answer may be different from one state to the next. Building Industry Association, it would be a place to start depending on what area you're working out of. But if you can find who those builders are, where they are, pull up through some of the tools and the resources that you have where you can track their business. How much of their business are they keeping? If you find out they're only capturing 60% of the business, and we have tools and resources to look that kind of thing up. If we can identify a builder who's capturing 40% of the market share, or 60% of the market share, there's 40% left over for somebody else to pick up, right? So first it's getting the stats and doing the analytics and doing that upfront work to figure out where the opportunity is. But to create the relationship, it may be starting with, depending on if those builders are cooperating with local real estate agents. I've worked with people where we've put together a caravan where realtors will literally fill a van with potential home buyers to drive them out to subdivisions where the resale agent working with a local real estate company, they're filling a van, creating a tour, marketing. Let's go look at those. They're heading it, they're facing it head on, saying, let's not be afraid. If I'm representing resale market, let's take those clients right out to the builders. So you can create a relationship with a real estate agent who is proactively selling the new homes. And if they're broker co-oping, that real estate agent's going to get compensated. They're picking up a ton of listings from that kind of experience. And they're obviously on the other side, they're representing buyers as well who do sign contracts with the builders. So that's a great opportunity.
So I just had an idea. What if the loan officer went to the builder, said, if I could get X amount of real estate agents here at the next caravan to tour your properties, would that be enough to earn me a second position if you guys need to decline a loan? Is that something that could work?
Absolutely. And understanding the tier of leadership, right? You may go as a loan officer out to a local subdivision on a Saturday afternoon, or more likely it'd be smart if you go out in the middle of the week when they're not as busy. Talk to that sales agent that's in the subdivision, but ask for an audience with their sales manager. Ask for the audience of the person who's putting together, depending on how many subdivisions they may have in the community. They may have a sales and marketing manager that you could have that conversation with, and create an opportunity where you're bringing teams of people, whether it's teams of buyers out to tour their properties, team of agents out to tour their properties. It'd be a great way to capitalize on that. And if you're the one putting it together, they absolutely would open up the door for you to come in that secondary position.
So knowledge bomb number 2, right? And I'll rephrase it a little bit because it could be said about multiple things. One of the ways that I built my business early on, somebody taught me about the theory of reciprocity, and I'll scratch your back if you scratch mine type of thing. And it's not, I'll scratch yours if you scratch mine. It's just giving, right? But if you give freely, you typically get just as much back. And I focused on getting financial planners their book of business. I was like, I can drive business your way. To the insurance guy, I can drive business your way. To the trust attorney, I can drive business your way. After I did that enough, all of those people decided they should be giving me deals as well. Now, we as mortgage advisors have this 1003, a loan application that has so much valuable information in it, and people call it a million different things. We'll go the Todd Duncan route, just say the circle of cash flow. And the reality is you have all these professionals that are involved in this 1003, and you could start figuring out how to connect with those, the CPA, the financial planner, the trust attorney, and the insurance guy. If I miss one, tell me. Maybe the window guy, maybe the solar guy, I don't know. The alarm guy, there's all sorts of people. But if you can focus on getting them business, I guarantee it's just a matter of time before they all start getting you business back. So I think that knowledge bomb number 2 really, it now goes right into finding out who the sales leader is or the builder, whoever's in charge over there at the division, new build division. If you're bringing people to them, you are doing something for them of value, right? And I think that's the easiest way to get noticed. I think that goes for everything in life, right? Like give and you get noticed.
Yes, the go-giver mentality, right? Forgot who the author was on that, but it's a great book. So just to live by that frame of mind, and if it's intentional, it'll things will come back around. So it doesn't have to be, you're not doing it for a self-serving purpose, but in reality, that does happen. As you give, more comes back to you, and we're all challenged with that each and every day.
Yeah, for sure. All right, so let's keep moving through your journey right now. I don't know what year that was, and we don't have to dwell in anywhere in the middle there, but I know at some point you decided you're going to get into management. I think it was B of A, right?
It sure was. So I had a good run with Countrywide. I had 6 years with Countrywide Home Loans. Mortgage meltdown happened, and Bank of America came in and bought Countrywide Home Loans. So I spent another 6 years with with Bank of America. And during that time frame, I was asked to go in to a leadership role, and I did that. I was a divisional sales performance executive, supporting and helping who the divisional executive was at the time. And as the market continued to margin compression and different things were hitting the market, we needed to consolidate and get rid of a few of our regional executives. And I was asked to leave the divisional sales performance executive team and to take over and run a region. And it was Arizona, Nevada, Colorado, and New Mexico. So it was a big territory. We had consolidated 3 different regions into one. And then the person who, the divisional at the time, picked one person to run all those. That guy wound up leaving, and I was looked to step in and fill that position. And it was a great experience to take on that responsibility and to help Bank of America in that region grow at the time.
Yeah, that's awesome. And even though I'm not a corporate guy, and I probably would have suffocated in that suit that you probably had to wear every day, I think there's a lot of valuable lessons that probably could be taken out of there. You don't get that big by doing things wrong. I know at some point you don't become nimble. You stop being nimble. You stop being, logical about things because there's a system or a way of doing everything and a higher up on everybody. And it just turns into a big sloppy mess in my personal opinion. But I think there's a lesson in everything. And again, you don't get that big being an idiot. So if you had to dig into your time with Bank of America,
Sure.
and then bring it back to today again, what are some of the lessons you learned during that time that you can say, hey, this made me a better person or a better mortgage advisor or a better leader?
Sure. I'll start with the leadership piece. When I was asked to go into that role, we were really the company was hemorrhaging at the time. Couldn't close loans on time. It was a challenge, and I'll say all that to I'm very proud of my time that I spent with Bank of America. It was a one of the largest financial institutions, and it was interesting as the entire economy was struggling through the Great Recession that we had. When I was put into that role as the regional, one of the big jobs that was given to me was to go shut down and shutter some of the branch offices that we had in those states that I referenced. What I found was there was even one in Montrose, over in Colorado. I remember flying in, and I went into this office. It was about 5,700 square feet of space, and I was supposed to be putting the chain on, locking it up, being done, getting done with it, liquidating everything, and working with the facilities team to close the office. And I went in there one day with the key and opened it up, and there was one guy in the back desk, just doing his thing, working. And he looked up and he said, "Carl, I don't want to go away. I want to keep building this business." And it really hit me that here's a guy who, despite what was going on, the environment that was around him, where everything was compacting and consolidating, here's a guy who's looking out for himself, proud of what he does, understood the value that a name brand like Bank of America give him, and he wanted to make something of it. I decided that day he's going to be my next sales manager. He's going to be the next branch manager. We're going to do something with that. We're not going to lock the doors. And we built that business in that office, in that branch back up. I had Arizona was another market where we had lost so many folks. I had branches that had originators in it with no branch managers because they were all jumping off the ship that they thought was sinking. And I started hiring some folks, and one of the it was interesting. Took them all out to dinner one night, and I had pushed out an email earlier that day saying the entire world is looking at what the United States economy is doing, and I was talking about the perception that other countries have looking at America, and I said, guys, we are the Bank of America. People are watching. Like, what we do is going to make. It's going to take note. There was just some brand recognition. We were the Bank of America. And I kind of used that as my rally cry. And I had everybody getting on board. And I said, every borrower that we close a loan for, every opportunity we can make something good happen for that customer is going to put one more chink back into the relationship and back into the reputation that Bank of America has lost over the time. So really try to put that pack on the loan officer and on the mortgage advisor, on the branch managers back to say, guys, let's rebuild this one customer at a time. And that became our rally cry. And despite the frustration with not being able to close loans on time, I have other perception of how they began to treat mortgage as more just of a product, another service that they offered rather than what true mortgage advisors could bring to the table. They kind of took away some of that unique magic that we had from the traditional mortgage banking operation, and they wanted to it was like selling another credit card to bank. And that's where I had to separate and go, hook up with a company that was focused on really maximizing the wisdom the originator can bring to both the clients that they serve and the relationship referral partners that they build.
And then if we had to, unless there's something valuable that I don't want to skip, you tell me. But if we kind of fast forward now over to the broker side of the business and, now you being here at Ethos, I guess first let me ask, is there anything I skipped that is worthy of talking about?
The only piece that I'll say is, that transition, it did take me to when Bank of America, I chose to leave Bank of America. There was some great leaders that had gone other places, and just, to have a vision. It's one of the things, Dino, that really brings me to Ethos is leadership that has a vision of where they want to go. Just, we're in a changing environment. We were then, we are today, with AI, with technology, with some of the things that we can do, with the consolidation of the real estate companies that we're seeing each and every day. There's the world is not stopping from spinning. It is changing in this industry, and to be forward looking, to be looking for opportunities to take advantage of technology to help us do those fundamentals that we once did. The relationship is key. And, it's not going to be the person who just completely adopts AI in its entirety. It's the person who can use AI and other pieces of technology to help them do what they do better, because they're going to be the ones who win this game.
Yeah. So the Ethos, the landing strip at Ethos, right? I'm obviously super happy about that, and I'm really happy about that you're not just coming over to do loans, you're coming over to actually leave a legacy with bringing other, teaching other people how to do things the right way. First, what drew you to that? And you can touch upon, like you said, vision of leadership and all that stuff. And keep patting me on the back if you want. That sounds great. I love it. But also, I know I would do want to get to like the mentorship program, right? And why that's of interest to you. But
Yeah.
if you want to pat me on the back first, you can.
We'll get to that as we keep going.
All right, fair enough.
That mentorship piece. There was a piece so I had built a practice throughout my career where the units and the volume that I was doing. It's fun to talk about some of those numbers. 15 to 20 loans a month is what I was running at. I was doing that as an individual, had 2 production assistants underneath me that were helping me out with that. But running a branch, managing that branch, doing that volume, it really it created a financial opportunity for me to my wife is an accountant. She's a CPA. We were very conservative with the money that we were making at the time, and that has been us very well into the future. But I made a decision when I was asked to go into a leadership role, and when I am going back to the Bank of America story, and what I wound up doing at Caliber Home Loans, staying in that management perspective. It was a 12-year period where I was in the ivory tower. But my decision to do that, my decision to go into that world was I had had a very successful career, and financially I had done pretty darn well and set ourselves up for some opportunities in the future, which, like I said, we're enjoying today. And my goal to do that was to be able to take the things that I learned at the time and to try to share that with others and help other people build successful and businesses for themselves. And it wound up being something that, as soon as I made that decision, it was announced at Bank of America. I had, people calling me up, asking me, I had the golden goose. The branch I was running was a phenomenal branch. My production was, the year I left was 129 million in volume. And back in, at the time that was about 15 years ago, that was a lot of volume then. And it was making an impact that I would choose to leave that alone and to step into what I was doing as a leader. It was absolutely a reduction in income. I didn't get paid the same I was making as a producer. I think sometimes the closer you are to the transaction, the more you're going to make. There's some balancing and scaling there, but you can, just the decision that I made, it wasn't a money grab. It was really to begin to have more influence over other people and expand the things I had learned over time and to share that with other people. So the opportunity to do that here with Ethos, to be part of a team who is truly looking to build and grow and develop a team of originators, whether you're at an entry level position, mid level originator, or a top producer. There's something that everybody can learn from. Everybody has a coach. Everybody has a mentor. Everybody has somebody they should be looking to help them sharpen the axe each and every day. And I think that if we can build that out at this company, if we continue to focus on those who are part of the team, I think we can really achieve something great.
I love my personal, like when I think about it, I love helping originators who already know how to do loans, and I can help tweak them a little bit to just like certain disciplines, do certain things, fine tune their initial consultation, stuff like that. But I'm not the best at saying, "Hey, let me teach you how to crawl first and then walk and all that." I can teach you how to run, but I'm not good at that whole initial piece. In all fairness, I haven't done that. I haven't done a lot of this stuff myself in a really long time. So,
Sure.
so it's hard, but, um, But I feel that, for all you guys listening right now, right? Some of you guys, all you do is focus on social media or how to get deals, right? And you should. That's great. But one of the things that I think is missing from today's originator is how to do loans. You got to go back to the basics, and I feel like you have to learn how to do loans. You have to learn how to manipulate a 1003 to make it work. You have to learn how to take certain scenarios where somebody wants to put 10% down and they qualify for, let's just call it 700,000, or since we have listeners from everywhere, let's just call it 500,000 so it doesn't sound intimidating, right? Like you qualify for 500,000, but you really want 550. And it's like, but you're putting 10% down, and the loan officer's like, all you do is qualify for 500. I'm sorry. Well, how about learning how to manipulate things a little bit? Maybe you pay off a car, maybe you pay off some credit cards, maybe you do a few little things that lower the debt ratio, and now you can up the debt ratio by going higher in purchase price, right? You don't have as much money down, but you do this. Or my favorite, loan officer, and this is, by the way, and I interchange and I shouldn't, but this is what a loan officer does. A loan officer gets a deal. They got a 719 credit score and they qualify for 500. And that's your number. Here's your approval letter. A mortgage advisor says, hey, you're 1 point away from something better. Let me show you what you need to do on your credit report to get you to that one extra point, to get you to 720. And if you do this, we might even get you to 740. If we get you to 740, you're going to get a better interest rate and you're going to have a lower PMI. What happens if you do that? You have a lower debt ratio. Now what? You can go higher in sales price, right? Like, so I feel that there's too many loan officers and not as many mortgage advisors. And that's the difference, right? I always say loan officer, but the reality is like loan officer has a job, a mortgage advisor has a career. And if you have a career, you should be good at this back end. And then when you get bigger, better, busier, you hire somebody to do that kind of stuff and you focus more on the relationships, right? Loan origination and relationships. But if you don't understand how to make that work, it's like you're not actually doing the best thing for your client. There's so many opportunities to be able to better a client's scenario. And there's so many different ways to look at it, but I feel like our job is to get people out of debt. If you get people out of debt, they have more money left over, and then they should go to the financial planner whose job is to help them increase wealth, right? And we have this ability to also help protect them, asset protection. We can refer them out to a trust attorney, right? We can refer them out to a better insurance agent that's going to get them a little bit of a better rate, both on the cars and the home. There's all these little things. So going back, I always go off topic, by the way, going back to this, right? I'm good at helping people how to run when they know how to already walk. But I know I'm lacking it. And as a company, we're lacking it. We don't have any of that like initial piece. And it's not easy, right? Teaching somebody how to do loans from the very beginning isn't easy. There's a lot of great avenues right now that you can go watch. You can take courses. I just sat through a thing with Rocket Mortgage. They just released, by the way, Carl, Mike's going to be calling you because he's like, I told him about your new role. He's like, so he's going to get you on the books to show you their new academy. They have this killer new academy with pretty much everything you can think of. And it's done professionally with test taking and quizzes and all sorts of stuff. And I think it's a really big piece it's a big win for Ethos to have you. So I'm super grateful for that.
Great. Well, I'll make just a couple of comments on that, Dino. And it's interesting that there's the technical thing we need to learn, right? How to put a loan together, spelling FHA, spelling VA, putting, those fundamental blocking, tackling pieces together. And then it comes down to that relationship with the client and having that hopes and dreams conversation and really understanding what their visions are, both short-term and long-term. Understanding what they can qualify versus what they can afford. Sometimes those are wildly different numbers, right? Somebody can, you bring in a cosigner, they can qualify for a heck of a lot, but they can only afford this much because although you have a cosigner, they're not going to make the bills pay, you're not going to pay the bills for you. They were just cosigning. So you can qualify perhaps for a lot more house than you can afford. And it's walking through that evolution with client to understand what their goals are, short-term and long-term, and then trying to figure out how to help them achieve that.
as you were saying that, it made me think of something. One time I was out with friends and my wife. We were at dinner. They asked me a question that had to do with loans, right? And I didn't give them an answer. I asked them a bunch of questions back.
Right.
And my wife turned to me. She's like, "Stop it! Like, why are you asking them such personal questions?" I'm like, "Well, I can't give them a good answer unless I know the answers to these questions."
Sure.
And I'm reason why I'm going there is because what I've seen recently with a bunch of different mortgage advisors that work for us, they're too scared to ask these questions. You have to ask these hard questions so you can know the real answers, so you can actually help them make a good decision. And I always tell them it's not my job to make a decision, but it's my job to present to you all of your options. And I'll help recommend what I think is the right thing for you. For example, uh, in my initial consultation, if they tell me they're going to be having their first kid, well, I know from experience when you have your first kid, unless your mom's around, I mean, childcare is expensive. Unless you got that handled, that's like another house payment for some people. It is ridiculously expensive, right? So we count on grandparents, and it's a big thing. But if you don't have that available, we need to start putting that into the budget now so that you don't get stuck later, right? That's just a simple, logical thing that's going to happen that a mortgage advisor should understand. The other thing is, one of the lines that I use a lot is, look, I would never push you to go buy the Porsche. I think it's a mistake. But the one thing I don't mind pushing just a little bit on is buying the better house. And only if it's a temporary squeeze, meaning if you're on a fixed income and we know what you're going to be making over the next several years, and it's not any more than cost of living, then let's not get you into a bad situation. But if you're one of these guys that are young in your career and every step is significant, not, $500 raise, but like 10,000, 15, 20,000, right? Then put yourself in a little bit of a tighter situation now. It's okay, because your projection of where you're going to be in 5 years is significantly higher, and you won't outgrow the house too fast. Not to mention the way appreciation is, it's a positive thing. So these are all the things that, if I could leave a legacy behind, it's to teach loan officers how to be mortgage advisors. And in order to be a good mortgage advisor, you got to learn how to ask the right questions. You brought all this up, which is where I got with it. So let's do, if you don't mind, and I'm sorry to put you on the spot, but let's do a little mock initial consultation. I'm the client. You're the mortgage advisor. You mind doing this?
Oh, let's do it.
I mean, you've done it a million times, so I think we can just roll with it. But I think there's a lot of value here to have other people actually listen in on how this is supposed to be done.
Yeah, absolutely. Well, Dino, I'm so glad that Karin referred you to me. She's a trusted real estate agent I've been working with for a long time. So to have her confidence to refer you to me means a lot to me. And I really wanted to just begin this conversation, opening it up and asking you a question. You and your wife, tell me your story. Tell me your whole story. What are you looking for? What are you guys trying to achieve?
Yeah, well, thank you. We've been married now for 5 years. We have a little one. We're about to have another one. At least we're planning on it. And we're at a place where we got to start thinking about the school districts. At the same time, I don't want to have to drive too far every day, because that's just difficult on me. But I'm the sole breadwinner of the family, and it's time to get into something that we're not going to outgrow as soon as we have the next child.
Fantastic. So what I heard from Carl when she referred you over is that you're currently renting, and how much, I didn't catch how much you were paying for rent. What is that?
I pay $3,500 a month in rent right now.
Wonderful. So I know the pillow talk, sometimes that late night conversation as you guys are thinking about making a home purchase. What are some of your, how are you pushing yourself? Are you comfortable with 3,500? Have you been saving money? If you've been banking and saving money, you have disposable income. And are you looking to put some of that towards a new home? And if so, what kind of payments do you feel that you can afford? What kind of payments are you thinking you can afford in this next step?
Yeah, I'm aware of the fact that I'm gonna have to pay more if we buy a house, and I definitely want it to be an upgrade, not a downgrade from where I'm at right now. But I think like 5 grand, maybe 5,500 at the most is my
Okay.
budget.
Okay. Great. Well, we can deepen this conversation by talking about how much you have available for your down payment, for your closing cost. Not only funds you may have today, but if you have access to other funds. I don't know if you have in your sphere of influence, if you got parents or in-laws or somebody who can help out. Um, we can talk a little bit about how much you have to work with for a down payment and closing cost. And then with that information and thinking about the amount of time that you're going to be in this next home, we can come up with some options and scenarios. And really, if we can present that in a solid and consistent way, we can help you make a solid and confident financing decision.
Yeah, I do. I've got probably 150,000 or so that's liquid right now
Okay.
between savings account and just liquid investments. And then I got about another probably 250 or so in my 401k. And I think my wife's parents are willing to help a little bit if we move closer to them, they said.
Very good. Well, I'll tell you what, Dino, that's just the framework that you're outlined. You already had shared with me that you guys, you're comfortable with your current payments. You've been making your payments in time, your credit's in good position. What you've given me is a framework that I can take back and build some scenarios so we can have a deeper conversation in a follow-up. So it'd be my goal to take the information that you gave me, some of the things you already had filled out online and provided to me. It'd be my goal to come back to you and present a number of scenarios and deepen our conversation in a follow-up call. So if you guys are available, how's next Wednesday look for you? So that's really, I would just try to get them to talk a little bit about seeing what things are available, like my conversation, the pattern that I go through. Again, for the purposes of this call, we would have gone deeper into things like credit. We would have gone deeper into your timeframes, how long you and your wife would be looking at this next transition. Perhaps it's a 3, a 5, a 7, a 10-year adjustable that we would slip into instead of just a traditional 30-year. That's where the education and that mortgage advisor piece would come in. And I wouldn't do that in the initial conversation. I really spend that time in the initial conversation is thanking my referral partner, learning all about you, your hopes and your dreams and your goals. And then I would take that information, and rather than trying to deliver that solution in my first call, I'm already booking the second call so we can go deeper. And really, it is my goal to present options, not just one solution, but options that together we can steer towards the right solution for my clients.
So you guys, I don't know if you caught all that. I mean, he did it. He just said it again, but he affirmed his referral partner. Super important. He did it in a really nice, easy way. It wasn't over the top where some people do that. It
Mhm.
sounds like you're trying too hard.
Was
And then he moved on,
right.
and the whole,
Mhm.
dreams and goals, right? Like he got me to talk, gets the clients to talk about why. The why. The why is so important. And you can use that throughout the entire transaction to always bring back to the emotional side of buying a house. That's the good side, by the way, because there's lots of crazy emotions that happen all the time, but you can recenter everybody on the real why of why they're buying a house. And it's super important. And I love too how you brought up when you talked about down payment and what's available and blah blah blah. You also said, is there a sphere of influence, right? Is there parents? Is there somebody that's available? I can't tell you how many times somebody doesn't qualify for something that they want, And it's simple as this. Is there anybody in your sphere of influence that can help? Whether it's give you a little bit of money or help you co-sign, right? And he's adding this to their thought process now at the early stage, just in case. And it's something that gets them thinking about it, right? Just in case. And parents, for the most part, love to help. They want to help their kids. It's
Yeah.
usually available if, and right now parents have so much equity. Who knows? You might even get a refinance out of it or an equity line out of it just so they can help the kids. Uh,
So,
so well done.
Dino, just a couple things that I'll capitalize on. That is, number one is with some of the tools that we have, the technology, to be able to put those scenarios, put it into a link and send it to the client. I'll invite those clients with the video and the summary of scenarios. I'll invite them to share that with those parents, those in-laws, those grandpa, whoever they're going to get that gift money from, or somebody, whoever is just even coaching them and they want to see what the numbers are going to look like. A lot of, parents can't imagine buying $1.5 million house. The one they bought 30 years ago was 150,000. It just doesn't even make sense. So let's put those numbers in a format that they can share it, not just talk over the phone with grandma and grandpa. But if you're going to ask them, educate them so they can see what this is all going to look like. Project out what appreciation looks like and how they can build equity into the future and build that generational wealth. It's a great opportunity to bring their tribe together and the people who are going to be in their corner to help them. And I would absolutely play into the conversation about, just because the grandparents said, yeah, we'll help you out, even if you move a little bit closer, they're going to help them with childcare. They're going to help them perhaps financially with down payment. Who knows? It could be a conversation about, if the people are old enough, it's a conversation about putting that ADU in a house, finding a property that has a little bit of land that they could do an ADU or a JADU and build something where the family can get together. One of the best, instead of doing first-time home buyer seminars, which so many folks do, I've been putting together seminars that says how to help your children buy their first home. So let's start educating those parents and grandparents who are sitting on a bunch of equity. How can they legally protect themselves, protect that young couple who maybe just got married? Sometimes grandparents aren't sure about the couple, so there's some things they can do up front. Invite an attorney in to talk about, how do you take title? How do you put those things together? Bring those conversations in up front where you're saying, I'm not just trying to put a deal together today. I'm trying to help you build a strategy for the future. And it's that deeper conversation that you can go so far with.
Yeah. And you guys, listen, he's been doing this for a really long time. That's why it comes off so flawlessly. I mean, it's so easy how it rolls off your tongue being an advisor. Everything you just talked about was easy for you. That comes with experience, and sometimes experience comes with mistakes and lessons learned. Which is fine. We all had to get through that. The faster you make mistakes, the faster you fail forward. And then you get better at your trade. You get better at what you do. But one of the things that we have available right now, Carl mentioned early on, mimicking people that are already successful. And hey, we don't all have offices anymore like we used to, where you're just not around it as much, right? But you have great podcasts right now. You have great YouTube videos. Dave Savage has an awesome YouTube video, or I should say podcast or show that he does weekly, and he interviews top producers. I've had some of the best guys on here, and listening to how they do business, you can start learning from these people. So do yourself a favor. Always educate yourself. Always spend a little time to get better at your trade, and success does leave behind clues. So go pick them up. Go pick up those clues. Carl, I'm gonna, unless you have more to say on that, I'm gonna bring it to a little bit of an end with some of my favorite questions. All right, first one's super easy. What's your favorite book?
Favorite book. We mentioned one that's fantastic, and it's The Go Giver. But I think one of the things that really helped define where I'm at today was the Atomic Habits, and really trying to ground, anchoring some of your activities to things you're already doing, using that as a way to capitalize, because it's not just having a goal, but it's accountability to help you achieve that goal that's going to really resonate.
Awesome. It's a great book. Haven't read it in a long time. I think I need to revisit it. And now to my favorite question. If I picked you up and put you somewhere in the United States and I gave you just enough money that you could cover all your bills, so you're not like totally stressed out, but barely enough money for anything else. And now you're like having to go back out there and hustle. You're going to be a loan officer, mortgage advisor. You have all the knowledge that you have, but you don't have any contacts and you don't have any real money to go spend on doing things. And I want you to get somewhat granular here, because sometimes I ask this question and people are like, oh, I'll just go do this and go hold a bunch of seminars. And it's like, yeah, but how are you going to get people to show up? So I'm going to flip this now to you and say, you cannot come back and see your brand new grandbaby until you've made $1 million originating loans. What are you going to do? Tell me how you're going to make your first $1 million in loans.
Well, first, could I ask you to drop me in Hawaii if we're going to do this experiment? Because I tell you, the weather we had yesterday and today is worth being here.
Fair. But no, I'm going to drop you off in Indiana.
Yeah, fair enough. So wherever that might be, some of the strategies, the tactics that I would deploy absolutely are going to revolve around getting local market exposure. I had referenced some of the things I do in the community. If I was brand new in a community, the first thing I would wind up doing is joining the Chamber of Commerce, probably even 2 or 3 Chamber of Commerces in surrounding cities. You're immediately exposed to so many different businesses, so many different referral sources. Just joining those Chamber of Commerce organizations doesn't do it for you, though. Just because you're a card-carrying member, the phone does not ring. It is getting involved in them and being on a committee and taking on some responsibility. They love a new guy coming in who's got new ideas. I'd have no problem diving right in. And then it's a systematic follow-up to meet and greet and begin to develop relationships. If they have happy hours, go to the happy hours. If they have ribbon cuttings, go to the ribbon cuttings. Every ribbon cutting, there's an owner of a business that they're trying to introduce into the community. Great opportunity to talk about your program for loans for their employees, explain to them the value if that new business can.
And there's free food.
And there's always free food. So that would be one of the first things I would do. Absolutely, would be get involved in the local community, whether it's a chamber of commerce. If you're, in men's group, if you are in a religious vein, go down that path. If you're Catholic, you're in the chamber. You're in a Knights of Columbus group. You're doing something internally with your community where you're putting yourself out in service to others, and through that, again, getting back to that reciprocity piece of the puzzle would be key. I'd be pulling all the levers if I needed to, make that $1 million so I can get back there to see my grandkid. The number of hours I would work would be ridiculous. I would absolutely have to turn it on and to achieve that goal. I couldn't do it the way maybe the successful guy has been doing it for years in the same market. He's out there golfing and taking his time, but he's got a lead magnet that he's built over years. But if I'm new in that community, I need to work that much harder. I need to have daily accountability, daily disciplines, and I've got to make my phone calls. And I would take technology. I'd pull up whether it's MMI or some other tool that we have access to. I'd find out, I'd look at the top agents. I maybe even would look, the next level down for agents who are doing 18 to 26 transactions a year. I'd bifurcate that and say, how many listings and how many sales are they doing? They wouldn't know me. I wouldn't know the history. I would know they're working with some guy named Dino, and I can't ever pull this agent away from this guy, Dino. I wouldn't know that. So I wouldn't be hindered to make that phone call. So once I got that list and I was very clear about who is doing business, it even shows when you look at MMI and some of those other tools, it actually shows you who are they giving the business to. If somebody was given 90% of their business to one particular loan officer, it's going to be a tall order. The agent who maybe closes 8 buy sides and she has 7 different lenders who does that business, it's a clear open door for me to go truly show the value of having a partnership with a loan officer who's willing to do open houses with them, do joint marketing with them, pick up the cost, pick up the phone and call their database, explain to them the value of doing an annual mortgage review. Well, you can tie an annual mortgage review to helping an agent say, let me see your database. If I can show you how I can bring an additional level of business to you, can I earn more of your business in the future? And by taking that real estate agent's database, we can have a partnership phone call that says, I'll reach out, find out if they're looking to move, buy down, buy up. Are they looking to consolidate? Are they looking to do an ADU? What's going on in their world? And I can call on behalf of that real estate agent and say, this is Carl Streicher with Ethos Lending. I wanted to reach out on behalf of ABC Realtor, who's asked me to touch base with you to see what your plans are. By the way, if you're in an interest rate where you need to pull money out, we can talk about doing, keep your current interest rate where it is, do an equity line of credit. Perhaps it's a conversation that leads to a refinance. Perhaps it's a conversation of they're buying their next investment property. But I'm doing it off of the referral system that the agent already has in place. So just those two things, going granular with my agents, with new agents who've never heard of Carl Streicher. They don't know my name. They might not know my company, but I'm having an educated discussion with them and showing them how I can help them do more business.
Yeah. And it sounds like leverage, right? You're leveraging your agent's database since you don't have one at this point.
Absolutely. Yep. That's exactly what it is. And there has to be a trust and a confidence there. And I'm more than happy to, I would put myself out to do it with them. We could do joint phone calls. We could do joint Zoom calls. We could go in as a team. In today's market, so many people are comfortable with a Zoom call or using other technology to do a joint phone conversation. Let's do it together with the agent. We can answer the consumers, we can answer that homeowner's questions about the real estate market, give them a true value of their home today. Look at the opportunities that lie ahead for them tomorrow.
Something you said that kind of sparked something in the old days. I always try to figure out a way to help a real estate agent be more productive. And I figured if I could do that, then, I earn one step closer to being able to get their business. And one thing I found, I don't think it's changed at all, it might even be worse, is that real estate agents are, for the most part, really disorganized. And I don't, if you're listening and you're an agent, I'm not knocking you. You guys are the epitome of working off your cell phones at Starbucks or anywhere for that matter, right? You're always on your cell phone. So it's hard to keep super great data on here. You are usually putting in somebody's name and you met them at Starbucks, right? And that's like all you have for notes. And you don't have details of anything. One thing I did a long time ago is I got really good at CRMs and databases and, how to keep in touch with people. And I think the same could apply now is you leverage their database, but you go in also with this, I'm going to help you clean it up. We're going to develop some campaigns. We're going to get them to re-engage with you. We're going to get them to set appointments. And we can use the annual mortgage review, right? We can kind of set up various things that bring you into it. But at the end of the day, I think you can prove your value if you can get their phone to ring or some sort of correspondence through that. And that's just putting a little effort out. Still the same as it was 20 years ago.
Yeah, absolutely. And it's interesting trying to get that appointment with that real estate agent. It's interesting if you are making your calls, right? Doing your daily disciplines. You set up that list of agents. I don't know their name. I've done my research. I can look at them online ahead of time. I can look at their units and the volume that they're doing. It's interesting to me. The better agents are the agents that when I call them, because it's my personal number, it doesn't show up as a potential spam. It's just a number that isn't in their inbox. It's the better agents that will answer the phone. And if they'll answer the phone, they don't know me. They've never heard of me. It's interesting. Those better agents who answer their phone when I call, it's so easy to start by complimenting them on the fact they answered their phone and how that sets them apart from other agents that I've been calling. And just that one little compliment will reduce their anxiety that they've realized it's a loan officer looking for their business. So it's now, where do we go with that, and how do I help them build business? By the end of their conversation, I'm hoping that they realize that I am in a partnership, that I'm looking to build a partnership to grow their business, not just asking them to send me business.
Yeah. Before we end it, I'm gonna say this out loud just so everybody can hear it. You're not necessarily focused on originating anymore, but you're such a hustler. You're such a hustler. You guys, he doesn't need to be doing this anymore. And I know last week he just got a list of Compass agents in his area and called them all to tell them that we're partners with Rocket Mortgage and your clients can get lower interest rates. I'm going to pause for a second and say, agents don't care so much about how much lower and all that, blah, 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 right? They hear it all. But he spins it with, which means they can buy a more expensive house. Now they're interested, just like that. And I mean, like, guys, if you are a broker working with Rocket and you haven't thought about that, I hope it's because you're so darn busy you don't have to. But if you're not and you can use more business, why haven't you? Why haven't you come up with the plan to call these Compass agents? Because you get much better. You get a whole, what is it, a point, 100 basis points if it's a purchase and it's a Compass agent?
It's 100 basis points. We're all waiting for the interest rates to come down. We're going to have a new Federal Reserve chairman who's going to be stepping in here, and everybody's waiting to find out what happens with the interest rates. And here's the top lenders, mortgage, Rocket Mortgage and UWM. Those guys are fighting for the business. They're trying to earn market share. They're rolling out opportunities so loan officers who can capitalize on that and bring that out and show an agent how it can help them close more transactions, how they can increase their purchase price because borrowers can qualify for more. It's not about, again, it's not about me picking up one more loan. It's how do I help that agent build their business and close one more transaction.
Yeah. Love it. Dude, thank you. Thank you for coming on. Thank you for obviously the podcast, but also coming over at Ethos and making your your legacy last here for years to come as well.
It's great. I'm looking forward to it, Dino.
Guys, thank you for listening. I hope you enjoyed this one as much as I did, and I hope you're enjoying all of them. I've been hearing a lot lately of people just reaching out and telling me they're listening to the show and how much they like this, and I gotta tell you, I still have a little disbelief sometimes. Like, really, you listen to it every week? and it sounds silly, but it's good to hear. It feels good. We put a lot of effort out into doing this. We put a lot of effort out into grabbing the right people to interview that offer some sort of knowledge for you to learn from. And if you guys can share that with me, I would absolutely love to hear it. If you didn't know, words of affirmation are my love language. So affirm. Let me know you guys love the show. You can do that by reaching out directly. You can do that by leaving comments on social media. You can do that by sharing a podcast that you like to your friends. So we love you. We thank you. And we'll see you on the next one.